Welcome to Markets Now. I'm Michelle Rook along with Mike Zuzulo, Global Commodity Analytics, and we've seen a rebound. All the grains to the plus side. Most of the livestock, except for feeders, are back higher as well. And wheat kind of led the charge this morning, Mike. And of course, some of that was on rumors of maybe Russia putting on an export ban. What is the status of that right now? And is that really the case, or is it just been short covering here?
Yeah, it's very fluid. That's probably the biggest thing to realize right now, Michelle. Right now, Argentina and Russia and those countries that we just don't have a good picture of right now on the crop. At least in Russia right now, we have a situation where the ag ministry is saying it's going to be probably no export tax at this point, but we are going to export halt, I should say, but we are going to raise the export tax $70 a ton starting next week. They also kind of said without saying that they were going to halt the exports because they said we don't want to sell below cost of production for our producers, and that's essentially this price. And so the way I'm reading the tea leaves right now is that Russia has sold enough. They're going to stand on the sidelines, try and get the price to go back up. And with the news we have right now, what I just related to you, I'm going to take the market at face value. If we can get above 645 in March corn with the wheat leading, if we can stay above 845 in the hard red wheat, which is the 40-day moving average, if we can reverse this negative sentiment on a weekly closing basis, I think that will do some good to this market, especially given that both soft red wheat and hard red wheat are up about 20% so far, just in the middle of the day here on volume terms versus where we were on the close yesterday.
All right. So you don't think it's just short covering. You think it has a little bit more lasting power than this?
If we can close here or better, that's exactly right.
All right. So the corn market has also gotten help from the wheat rally today, but obviously the China business keeps coming at that market. Cash basis levels have been very strong. Old crop, we have seen an inverted market there, and that inversion is pretty large. Does that continue?
No, I like the way this corn market has been bought and the soybeans have been sold. I think the key with the corn is we're probably getting to price levels, i.e., that 645, 650 level in the May, where it's going to be very difficult to go higher without the help of both the wheat and the soybeans. And I think this goes back to the banking issue and what we have to deal with in the outside markets. I don't like the fact that Deutsche Bank is down 15% or was down 15% earlier in the day. The European banks are looking very, very weak right now, and that could spill back over in the United States. And that's just money management. That's just risk aversion, and that means get out of your positions and zero your books out. And we don't want that at this stage of the game. And so I think that's where, with the Fed in the rearview mirror, we want to have a macro tailwind instead of a macro headwind. So I think corn is right in the middle of that because it has held its premium. Earlier this week, for instance, I noticed that November beans had dropped 90 cents, and we were at the exact same price in December corn versus where we were on the March WASDE report. And if we can close above 645 today, that would be the best price since that March 8th WASDE report.
Well, certainly something to keep an eye on. So soybeans, I don't know if we would be up today if it wasn't for the rally in the wheat market, and we've seen funds liquidating in that market. Do you think that we have more liquidation to do in that market?
I'm inclined to think that we could because of the March acreage and stocks report and just the cyclical nature of these beans. And I think it's really critical that we stay above $14 in the May beans. Otherwise, the sentiment probably will turn more negative again, Michelle. But I mentioned Russia and Argentina together for a reason at the top of the show, and that's because the trade is very uncertain about Argentina's soybean crop. And the Grains Exchange said yesterday that their soybean number could go lower based upon the yields that they've seen so far. So while we probably have the corn mostly nailed down in Argentina, the soybeans are still a moving target. And I think that's going to become increasingly important because of how fast this Brazilian price in beans at the Port of Paranaguá has dropped. It's gone from about $550 a ton down to $500 a ton. It's almost a $100 spread between Gulf of Mexico, Pacific Northwest versus that Brazilian price. So we need Argentina to have a short crop and rebalance the scale some.
But we have lost a lot in this market in the old crop. I think from the high that we set on December 30th in soybeans to the low that we put in this morning, we had dropped like over $1.80. New crop beans have dropped substantially. What is there something else going on here besides just funds liquidating? Because we've seen an exodus and a lower prices in places like China, and soybean oil has fallen out of bed. Is there something else going on?
Yeah, I think so. I mean, the soybean oil is a little confounding to me, other than the crude oil market going down to September of 2021 lows, and bean oil is at September or August or November of 2021 lows. It seems like they're tracking one another overall, but not day to day. But the meal seems a little bit more, I guess, makes more sense to me from a standpoint that the trade was taking meal higher, even though we were hearing more production problems in China on the hogs with the African swine fever. We're hearing about the HPAI breaking out in the chickens and the poultry and the turkeys, and the market still took the meal higher. And I want to say they were just bulled up on the Argentine weather. And they had to come back and reevaluate everything. And I think that took that bean corn ratio to price levels before the WASDE report that we were buying bean acres instead of corn acres. And that made no sense, especially in light of these Chinese purchases. And so what I saw was kind of a light flashing before the Chinese started buying U.S. corn. But really what happened was the Brazilians stopped selling Brazilian corn and have to get their beans out of their country because they don't have the capacity. It's a big crop. You can see that in the price. And I think at the end of the day, that's probably when we look back, that's why we had such a terrific slide in the beans. We put too much premium in, and then we realized the crop was big based upon the pork price.
Yeah, and I want to clarify that buck 80 drop that I talked about from the beginning of the year basically has been in the November new crop. I don't know that many guys that even have old crop left to sell. Let's also talk about the hog market, which obviously has had a string of new contract lows day after day. We're trying to bounce today. Are we trying to put a bottom in, or is this just short covering, Mike?
No, I think the hogs are a lot like wheat, and in that the trade is ultra focused on the foreign or the world situation instead of the domestic situation. We have a very good consumption base in the pork side right now. It's winning at the grocery store, it's winning at the restaurant, in my opinion. But the world is looking at the export market and looking at the supply demand of the world right now. And so if that's going to be the case, and if that's correct, I think we're coming into a season where we should be back into a more positive bias because we are going into summertime. I would also note that the last few days, the big breaks to the downside were met on very low volume. That kind of indicates to me we're running out of the long pool. We need to recharge the long pool if we're going to take the prices any lower. So I think stability here is I feel strongly about, but maybe even a seasonal low at this point.
And live cattle also trying to rebound after this correction that we've had. And do you think we're trying to put in a bottom there? Fund situation is still, those funds are pretty long in that market after we had, exodus here because of the banking situation and fears economically.
Yeah, I think the fat cattle are trying to put in a low going into the summertime. You can kind of see the structure of the market already has that in it, where the April is about $1, $2 below the cash, but then you go to the June and then the August also trading 155, 166. They're 6, 7, maybe even $8 cheaper than what the cash prices will be here in the next 30, 40 days. So I think we've already put those lows in those summer fat cattle months. I'm not so sure about the feeder cattle because I do think that if the corn has a run on delayed plantings anywhere in the Midwest or the Deep South, and we start talking bigger bean acres at the expense of corn, and the trade catches wind of that, given China's purchasing power, that we may be in for another route where the corn gets bought and the feeders get sold.
Well, I hope so, because certainly the fundamentals are still very good in this cattle market. All right. Thanks for joining us, Mike Zuzulo with Global Commodity Analytics here on Markets Now.